Hey guys, welcome back to the channel. Today we'll be talking about how Stellar could be at the center of stablecoin developments around the world, and we'll also be discussing a paper published by the BIS and how this could be linked to Stellar. So in a fairly recent clip I came across on Twitter, the clip provided details in regards to stablecoins and how a number of networks from the marketplace, including Stellar, could be actively leveraged in stablecoin initiatives, which could greatly improve activities such as cross-border payments. So the clip features a member at the Stellar Development Foundation, Candice Kelly, going into details surrounding the benefits Stellar provides, especially in cases surrounding cross-border payments and the utility of stablecoins.
I find interesting is that at least cryptocurrency, and I mentioned it in the previous panel as well, came out of people who distrusted the system and felt like the system failed them, even in the developed world post the financial crisis, saying banks didn't do their jobs, governments didn't do their jobs, we can do it better. What I find fascinating here is that we had somebody from the government of Estonia and now a national banks. So governments are kind of adapting to the new technology, and if I understand the solution that you are presenting as a potential one, you would not decentralize your mandate to the people, but you would decentralize the technology, which would create more trust in places where you say. So in other words, in the developed world, it would be the trust in the institutions might be there, but the technology would be more trustworthy. And you're saying in the global south, where we don't actually have trustworthy services, this could come in maybe from other parts of the world to provide people with solutions that would allow them to also have access to financial services?
Yes, I think that there are a lot of different permutations of how the technology itself can help to close the trust divide, and it could be between banks and citizens. It could be that there are certain places where citizens want to be able to interact directly with each other, and it provides that optionality. And so I think we're very focused on making sure that solutions are interoperable, and so it's not that we're switching from one system to another, but we're adding more options to meet people where they are and address their specific needs and particularly their concerns with respect to trust.
And to ruin the party a little bit, we spoke a little bit about the negative externalities of some of these new solutions. So when we spoke earlier, you were telling me that the digital euro would solve the problem of volatility, for example, of cryptocurrencies. So we saw some of the new technologies also creating problems that didn't exist before. I would assume that for some of the unbanked people in the global south, if they start now using cryptocurrency, they're even more vulnerable to the volatility of the currency. So the most vulnerable people would be the most exposed to new risks. So these new decentralized technologies might not solve some of their problems, but expose them to others.
I think that's right with respect to traditional crypto. Traditional sounds
traditional is in 5.
Oh yes, a few years. But the Stellar network is really optimized for asset issuance, and so from before there really was a term stablecoin, there were assets being issued on the Stellar network that were backed by fiat currencies, and so I'm not aware of any algorithmic stable coins on the Stellar network. They're USDC and other fiat currencies that are backed, and so it's capturing all of the benefits of this technology for transparency, for speed, for security, and minimizing that risk of the volatility, because these are the stable coins, and we're working very diligently to try and make sure that we have the appropriate regulations to, there are a lot of good actors in the space who are leading the charge, but some of those good actions that are not regulated and not codified yet need to be codified. But that's one of the ways that you get rid of that volatility concern. Because, for example, in Argentina, the whole point of using the blockchain technology is so people in Argentina can avoid the volatility of their own currency and hold it in a dollar-backed token.
So the intrinsic qualities associated with Stellar, especially in cases surrounding cross-border payments and the provisioning of stablecoins, could be put into conjunction and given context in regards to developments involving the monetary system. Where in a paper published by the BIS, the paper provided details and discussed developments involving the future of the monetary system, where the paper provided details in regards to the need for interoperability mechanisms and the need for cross-border payment infrastructure to be implemented to greatly improve the accessibility and enhancing monetary functions between financial bodies around the world. The paper also provided details in regards to cbdc developments and fast payment systems to greatly improve financial activities which arise around the world. So the paper initially detailed to the need for the rolling out of CBDCs and fast payment system protocols, which will go a long way in improving the current limitation associated with financial activities, including greatly reducing the cost associated with the validation of payments and also enhancing the speed by which transactions can be validated and reach finality. So the key points provided by the BIS in regards to developments involving the monetary system was described in a diagrammatic form, where the BIS provided a diagram which represents the connectivity of financial institutions around the world and how the utility and implementation of frameworks including wholesale CBDCs, retail CBDCs and retail fast payment systems could be actively incorporated and utilized in improving financial activities which arise between the likes of central banks and retail banks and between retail and central banks. So as part of this diagram, the diagram illustrated two retail CBDCs. So retail CBDCs could be a means of enabling improvements in the ability and capability of financial actions to arise between varying bodies and individuals within the marketplace, including regular consumers. So the majority of central banks around the world, especially central banks based in developed nations, are looking and are conducting research surrounding retail CBDC developments. So despite these central banks conducting research surrounding retail CBDCs, figureheads within the monetary system and financial leaders have given their insights in regards to how stablecoins could be a viable means of adhering to retail CBDC desires and frameworks, where stablecoin utility could be actively harnessed and implemented into financial activities which arise within a nation. So a number of DLT networks have looked to and actively provide stablecoins on their networks, where one example of a stablecoin provided by a network is the USDC stablecoin, which is based and backed on Stellar. So the USDC stablecoin is a regulatory compliant stablecoin and again is only available on a few blockchain networks. So with the highly regulated nature surrounding USDC and with the benefits stablecoins provide, especially in terms of providing stability, whilst also enabling enhanced finality rates, transaction validation capacity and low costs, central banks and financial bodies around the world may look to the likes of stablecoins as a means of enabling financial actions to arise within an economy rather than the direct utility of a retail CBDC. So if a CBDC including USDC is incorporated into financial activities which arise within a nation, nations may look to the likes of the Stellar network to harness the benefits USDC and stablecoins provide. So this could be quite beneficial and bullish for the overarching Stellar network if these financial bodies do look to the likes of Stellar for such activities. So the diagram also provided details and represented the need for a retail fast payment system. So the need for retail fast payment systems will mean that financial bodies, especially within a nation, can actively communicate more seamlessly and rapidly. So again, the Stellar network could adhere to this desire, most notably due to Stellar already being at the center of cross-border payments and fast payment system protocols, where the Stellar network is equipped with a number of frameworks and innate qualities which makes it ideal for such mechanisms to emerge, where Stellar provides high speeds, is cost effective and offers high finality rates. So the key and intrinsic qualities associated with Stellar could make Stellar a viable candidate and ideal proposition for financial bodies including central banks to harness the benefits provided by Stellar in terms of retail fast payment system protocols. So the direct incorporation of retail CBDCs coupled with fast retail payment system protocols could make the likes of the Stellar network a viable candidate in enabling financial activities within a nation to be validated and more widely accessible for more individuals within the public realm. So the BIS also provided details in regards to the need for the utility of private sector technologies and frameworks to enable such actions to emerge. So the Stellar network, coupled with its innate qualities and its provisioning of stablecoins and fast payment retail protocols, could make it ideal in central bank policy and just general financial activities which arise within a given nation. What are your thoughts on Stellar? Do you think Stellar is the best option for retail CBDCs and fast retail payment protocols? Let us know your views in the comments below. Thank you for watching Crypto Clan. Don't forget to like, subscribe and click on the notification bell. Let us know your views in the comments below. Thank you for watching and we'll see you in the next video.